Oh, hi, all. It's Susie again from Esoteric Trading Solutions. I hope you're all well. Please be kind to yourself, be kind to your family and friends, be kind to just people in general, and just make this world a better place. I was just about to go to bed, actually, at 5:05 a.m. in the morning in Melbourne, but a client just passed an article through to me about the SEC, and it was about whether cryptos are securities or not, and I just can't believe how stupid they are. No disrespect, but seriously, I just cannot believe it. They're actually blinded by the science, or slash, should I say, blinded by the technology. I just want to point out something and keep it really, really simple. My belief is all cryptocurrencies are securities, okay? And I know that's very, people disagree or whatever, and it's very controversial. And the retail market, for some reason, thinks it's a bad thing, but it's not, because when the big boys get in, they're basically, they want cryptocurrencies to be classified as securities, because in terms of their mandates and everything, they can invest in securities, and they need the market to be regulated, and they need custodians so that their coins can be housed in safe, hard safes offline and all that sort of thing, and they need custodians to have ratings. But anyway, that's another story. But in terms of cryptocurrencies, ICOs are basically a funding tool. Now, what I mean by that is, if we look at the equity market, okay, initial public offering, okay, a company comes to the equity market to fund the company itself. They do it with an IPO, with a prospectus, and they get funding through their equity shares, right, which will go on as an initial public offering, which means they haven't yet started trading on the equity market, on the exchange. So with an IPO, it's the funding, they sell equity and they get money in, and that money will come into the corporate. Okay, that's number one. With the bond market, which is debt, a company can either issue equity or they can issue debt with a bond. In the professional market, it's term of reference, they call it, where an investment fund manager will get a term of reference for the bond, and it'll have all the details of the bond. If it's going to the retail element, there will be a prospectus, and a retail element's the mums and dads that will buy anything under $250,000 or something. So a bond will be issued as an initial bond issue offering, and funding comes in, money comes in to the corporate, the bank or government. It's a funding tool. In other words, money coming in, a funding tool, an IPO or initial bond offering. An ICO is an initial coin offering, a funding tool. Forget about the technology for a minute, okay, and I'll make this point. The ICO is funding, money coming in to fund the technology of that ICO, of that coin, okay? So initially, all these coins and all these tokens would have either gone to the market as an ICO or got private investors. Rather than ICO, they would have got private equity investors to invest in the technology, okay, rather than going through an ICO. So they would have got their money from somewhere. Okay, that's number one. Just like any of these guys up here, IPO or initial bond offering. The ICO market, whether they went to the market or not, as an ICO, the money would have come in from somewhere to build the technology. Okay? Now, in terms of securities market, if you go and get money from anyone, whether it's private equity money before, even an ICO is done, or whether you go to anyone to get money in to build technology, there's a contract, because people don't give you money without a contract, okay? Now, if you go to a lot of different investors, over, 20 or 40 or 30 or whatever, you have to have an IPO or initial bond offering or an ICO. Okay, now most of these cryptocurrencies had an ICO where money came in to build the technology. Now Ripple didn't, but Ripple had they had a company where the technology was given to them. Okay, but that technology was worth something, and they would have bought that technology for something, right? And the same with Ethereum and the same with Bitcoin. Even though they may not have done an ICO and that the founder, Sakamoto, or what his bloody name is anonymous, where did they get their money from in the first place to build the technology? The SEC is being blinded by science and technology. It's got nothing to do with a coin being centralized or decentralized. Absolutely nothing. It's got to do whether someone buys or sells a security on the secondary market now, because none of these are now IPOs. They're all in the secondary market. And what I mean by the secondary market is they all deal on the exchange. Like me, you, anyone else can go to the exchange and buy Bitcoin. We can go and buy Ethereum. We can go and buy XRP. We can go and buy Neo. We can buy anything, right? Where there's a buyer and there's a seller. Where we do a price, we buy a price or we sell a price, and we do it at a level. And of course, the buyer or the seller is expecting to make money. We don't go and buy something and expect to make a loss. I mean, that is just absolute garbage, right? And it has nothing to do with centralization or decentralization. And it doesn't even have to be about ownership. You can go and buy bond futures, buy or sell bond futures, and there's nothing to do with ownership. Now, I'll just go to this article that I'm referring to because it came out today, and with no disrespect, this guy from the SEC doesn't have a clue about what he's talking about. It won't be a sec. So if we go to this article called Crypto Globe, SEC spokesman says Ethereum and Bitcoin are not securities. Market rallies and relief. Well, I find it hard to believe the market keeps rallying and relief, because if everything's classified as security, it means the big fund managers can come in and it's actually going to be better for the market than the retail element that's now playing with the market at this stage, because they're not even pricing things properly, like EOS, where the blockchain's still not up and running. The coin's still traveling at $11. 90% of it's held by one or two holders, and it's got no revenue. But anyway, look, that's another story. Okay, this guy, in a recent SEC spokesman, right, said that Bitcoin and Ethereum are not securities. However, ICOs are securities, and therefore under the regulatory purview of the SEC. Bitcoin and Ethereum high-level decentralization was cited as reasons why they are not classified as securities. That in itself is absolute garbage. Whether something's centralized or whether it's decentralized has nothing to do with whether Bitcoin or Ethereum that trade on a secondary market are securities. It has nothing to do with the underlying technology. Like I said, if you go back to what I said exactly, someone funded the underlying technology. It's got nothing to do with the centralization or the decentralization of the blockchain, okay? Nothing to do with it. It just doesn't make sense in terms of financial markets at all. As I said, companies fund with debt or equity, money comes in, companies or individuals fund with an ICO, money comes in for creating the technology. Now, someone created the technology, and what did they use to create the technology? And that's what they need to look at. They're looking at the completely wrong thing. They are completely blinded by the science, I have to say, in terms of technology. Then he goes on to say, and this is where it just gets even more ridiculous. This guy was some guy, William Hinman. No disrespect, Mr. William Hinman, but honestly, you really don't know a lot, I have to say. Fair income, you really honestly don't. He goes, ICOs are securities whether there is an expectation of profits from a third party. Right. Investors in the cryptocurrencies have an expectation of profits. The assets could be classified. Of course they could be. Where investors have an expectation of profits, the assets could be classified as a security. How can you say Bitcoin and Ethereum are not securities when an investor or trader will buy Bitcoin and Ethereum with the expectation of making money, making a profit. Centralization and decentralization of the technology has nothing to do with Bitcoin as a coin and Ethereum as a coin when you buy and sell it on the exchange. Has nothing to do with it. That's what I'm saying. The SEC is blinded by science/technology. I mean, it's got nothing to do with how, the coin is classified as a security or not. I mean, it doesn't make sense. You can't say Bitcoin and Ethereum are not securities because they're decentralized. That's technology. It's got nothing to do with the coins being bought and sold on an exchange by third parties who all have the expectation of making money. It's just ridiculous. The high level centralized greater chance for crypto, I mean, that's just absolute rot. I mean, honestly, as I said before, all cryptocurrencies are securities. The definition of security in financial markets is when you buy and sell a coin or a token where there's two parties, a buyer and a seller. You do it at a price. One makes a gain and one makes a loss. And it doesn't even have to be ownership, which has nothing to do with whether the technology is centralized or not. And honestly, this guy doesn't know what he's talking about. Seriously, doesn't know what he's talking about. He is being blinded by the science of decentralization and centralization of blockchain. And the fact that the market's rallied is pretty dumb because, seriously, in this big scheme of things, at a macro level, when all the professional players in, all the funds sit in fixed interest and in equity markets, and basically they need things classified as security because literally, if they don't, they would have to go to every client that they manage money on behalf of, which would be in the millions, and get them to change all their, investment prospectuses and their investment funds to say, can we invest in something that's not a security? The big picture is, if everything is classified as biosecurity, the wholesale money market managers, where there's trillions in dollars, BlackRock has 5.5 trillion, Fidelity has 2.7 trillion, can come into the market and buy securities. This is just garbage, what he's saying, garbage. No wonder investors are confused because the guy saying this has no idea about what he's talking to. The money had to come in to someone to create the technology. It's got nothing to do with the coin and the token being bought and sold on the exchange. The technology has nothing to do with that. The question is it being bought and sold on an exchange where people expect to make money, and is it being done by third parties? Of course it is. That is a security. Full stop. Anyway, guys, I hope you get something out of this. Thank you for your time, and I'll talk to you soon. It's 5:18 here, so it's time for me to go to bed. Thank you, Susie. Look after yourselves, guys.